We've gotten used to up and to the right, but being interrupted by every 4 years by a down cycle. And so I think a lot of people have been fearing a down cycle. We did hit 120,000, happened to coincide with the flash crash on 10/10. And so we're trying to sort out, okay, right now, is there a big whale out there that has not surfaced yet and is somehow related to the leverage that has been taken on in the last few years? We don't think so, but we do not think the probability is zero. So that's one thing. I think the other thing, and so we do have the question of 4-year cycle. Is this it? And was 80-ish thousand the low?
Bitcoin just crossed a threshold most people are not ready to acknowledge. After years of speculation, regulatory attacks, and constant doubt, the protocol hit escape velocity. That means no government, no institution, and no coordinated effort can stop what is coming next. Bitcoin is no longer an experiment. It is a functioning global monetary system growing faster than anyone realizes, and the people who see it clearly are making moves right now, while everyone else is still asking if it is too late. The problem is that most people are measuring Bitcoin wrong. They look at the price in dollars and think that tells the whole story. But the real story is not about price. It is about adoption, infrastructure, and the collapse of trust in traditional financial systems. Emerging markets are not waiting for permission. They are building circular economies with Bitcoin as the foundation because their currencies are failing and their governments cannot stop them. Meanwhile, institutions that spent years dismissing Bitcoin are now scrambling to get exposure before the window closes. And now, Cathie Wood of ARK Invest is saying something that should make everyone pay attention. She said Bitcoin has fundamentally changed, the 4-year cycle might be breaking, and what happens next will not look like anything we have seen before. Let's hear directly from Cathie Wood for more insights. Please don't forget to like, subscribe, and enable notifications. Thanks for joining us again. Enjoy the rest of the video.
Couple of things. Clearly, we've gotten used to up and to the right, but being interrupted by every 4 years by a down cycle. And so I think a lot of people have been fearing a down cycle. We did hit 120,000, happened to coincide with the flash crash on 10/10. And so we're trying to sort out, okay, right now, is there a big whale out there that has not surfaced yet and is somehow related to the leverage that has been taken on in the last few years? We don't think so, but we do not think the probability is zero. So that's one thing. I think the other thing, and so we do have the question of 4-year cycle. Is this it? And was 80-ish thousand the low? So we'd like to see a test here. And if we can get by this year or this cycle with a 30+% drop instead of a 50, 60, 70% drop, that I think will be a victory and will be consistent with the lower volatility that has defined Bitcoin as time has gone on here. So that's the first thing. The second thing is, I actually said, and boy, Andrew Ross Sorkin ran with it when I said on CNBC Squawk Box one morning, well, it seems to me that stablecoins are usurping a role that we thought Bitcoin would play when we put out our first white paper in 2015. And that does seem to be the case. We do see a lot of activity, especially in emerging markets, focused on stablecoin. Stablecoins are serving as the insurance policy that we thought Bitcoin would provide to people in emerging markets as they were trying to protect themselves from confiscation of their wealth, whether it's in the form of inflation or just outright confiscation and capital controls and so forth. He ran with that, but I had to put that in context. That was everything else equal. Well, something else was going on, and that was the gold price moving up as rapidly and as much as it has during the past year. And so the digital gold role of Bitcoin, we think is that much more valuable and probably is more than offset what I just said about stablecoins. So I think we're sorting through that. And I think in terms of the future and next year, we have seen very little institutional buy-in. It is just beginning. And I think if we get the U.S., for example, not adding just confiscated Bitcoin to a strategic reserve, but out there buying, and we don't know if that's going to be the case, but if they were to do so, I have a feeling that would set off what we're all waiting for, which is, the scarcity value to reassert itself again now that we're near 20 million Bitcoin outstanding and we only have 1 more million to go. I think the party has just begun in that way. And so we're still very optimistic. When we did our first white paper on Bitcoin in 2015, we were worried about government regulation, and rightly so, given what happened here in the United States, and just a lot of lobbying against Bitcoin. But what has happened is that it has developed to such an extent that it hit escape velocity despite all of that. And now we have some tailwinds behind it in the form of government policies and deregulation. So it's pretty exciting, I agree. Not only that, I remember when China, this was early 2017, basically banished Bitcoin mining. Basically, everybody thought Bitcoin was going to fall apart because so much mining was done over there. Quite the opposite happened. That was the beginning of a massive move from less than $1,000 to $20,000 in 1 year. 2026 is in the U.S. the midterm elections. And President Trump does not want to be a lame duck. So I have a feeling that he is going to work with his crypto and AI czar, right, to do a few things. One, make sure we get that de minimis ruling through. Make sure. So because, grassroots is where a lot of what we've been talking about is going to happen. But also it seems as though there's been reticence about actually buying Bitcoin for the strategic reserve. So far it's confiscated. The original intent was to own 1 million Bitcoin. So I actually think they will start buying because I think this will help Trump in a couple of ways. The midterm elections, part of the reason he won the presidency, I think, was the crypto community. Yes. And another reason, of course, is his family is all in on Bitcoin and other crypto assets. And they have, we talked about the DATs earlier. They've kind of fallen apart this year. So I think he's got all kinds of reasons to do this. But the most important one is he does not want to be a lame duck. He wants to have another 1 or 2 productive years. And I think he sees crypto as a path to the future. The second thing that I think we'll see next year is a big surprise in GDP growth because of the OB3 and the corporate tax deductions. Like our corporate tax rate in the United States, the effective tax rate has dropped to 10%, which is the lowest in the world for any developed country. So I think and we have accelerated depreciation as the primary reason. You put a manufacturing facility in the U.S., think this about Bitcoin miners. You put a manufacturing facility in the U.S., If you start building it by the end of 28, you in the first year of service will be able to depreciate it 100% in year one, not over 30 to 40 years. So you get huge tax refunds. So I think we're going to see massive growth, and the deficit, they're going to have more degrees of freedom in which to work now.
Cathie Wood explains that when ARK published its first Bitcoin white paper in 2015, the biggest fear was government regulation. Governments could have crushed Bitcoin before it became too big to stop, but they did not move fast enough, and now Bitcoin has reached escape velocity. Countries that try to ban it will lose a competitive advantage to countries that embrace it. Wood points out that Bitcoin is both a risk-on and risk-off asset. During the 2023 regional banking crisis, Bitcoin was the first asset to recover because it has no counterparty risk. The party is just beginning because institutional adoption is barely starting. What gets missed in most debates is a simple but critical distinction. One Jeff Booth emphasizes, Bitcoin is not a technology competing with other technologies. It is a protocol, and protocols function in a fundamentally different way. Technologies compete until one wins and the rest disappear. Protocols are built in layers, and each layer adds functionality without replacing the base. Bitcoin is the base layer that secures value, while Lightning handles speed. Other layers add privacy, and programmability is built on top. Most people keep looking for the next coin that will replace Bitcoin, but that completely misses the point. Bitcoin does not need to do everything. It just needs to be the unbreakable foundation while everything else gets built on top of it. That is why it will not be replaced. Now let's hear directly from Jeff Booth.
What would you expect in the world today? You kind of riding on the back of exponential technology rails. Right? You would expect exponential everywhere, and that exponential to drive productivity. And as it drove productivity, more people would use those things. So everywhere I'm watching, all over the world, people are using this. We're building on top of it and building a protocol stack that looks like the internet on top of energy, a parallel internet, that is being used like globally. And it's growing so fast, and people don't understand how fast it's growing because they're measuring it from a piece of paper. And the piece of paper that they're measuring it from has, when you say liquidity, let's just explore what liquidity means. It means dilute the value of your money faster. And so everybody's waiting like on bated breath for when to buy Bitcoin, when they're going to dilute the value of your money faster, when you know they're going to. Everywhere is going to. And so, but if you measured that outside of that system, from a system that was a protocol bounded by energy, what would it be telling you? It would be telling you with a free market working perfectly. Right. And that's what you're seeing. You're seeing an explosion all around the world of people using this and building onto this protocol. And it's growing way faster than most people believe as a medium of exchange. And when you go to these places all over the world, it takes your breath away. And then you come back to the US or something, and people are worried about the price on a piece of paper. Circular economies, in regions in Africa and so in El Salvador and all over. I go to these places and it's being used as a medium of exchange. Now, I will grant you that stablecoins is a big part of not outside of what I'm talking about, is a different animal. And again, what is a stablecoin to Bitcoin? A stablecoin to Bitcoin is a guaranteed loss coin. It gains its stability by the thing that's losing value to Bitcoin. Right. But most of the people don't know what you know, Cathie, what we know on this call, that this is a protocol imposing a new system. Right. And from the stablecoin, if you're in a country like Nigeria, which is losing money faster than the US dollar looks great to you. So you would use a stablecoin because it's a relative loss versus your absolute loss would be greater all over the world. But as you start using that, and then and a lot of the technology is being built in with both, then you start to see the relative value of the stablecoin losing against Bitcoin, and you start to move. So we're just so early in this cycle, and most people and most people are pricing Bitcoin as an asset underlying underlying a monetary system, when it's a protocol that's emerging, that's repricing everything. And they're only seeing a tiny fraction of what Bitcoin is because they don't see the other protocol layers that are being built on top. What typically happens with the technology that for the monopolies, right? The technology is always a bottom up, and the monopolies typically do the exact same thing. They try to block the technology. And so if a protocol came and it was a protocol stack that was coming for money, what would that look like to the people that were in the money monopoly? And I think that's what we're seeing. I think that's why we're seeing this bottom up disruption all around the world. Because when we're investing in companies now, some of the talent that's moving into this ecosystem, global talent, and people that take my breath away with what they're building, that most people looking through the lens of a fiat dollar here can't even see. They can't even see how fast this is moving because they're not accessing that same type of talent. Critical in the U.S., but overall for the protocol and everything else, and this is why it's critical in the U.S. What's happening around the world, and if you just think, we are inside a system that we all pay 2.5% per margin. Pay or for 2.5% to take money, exact tax, to take money through an intermediary who in money that's losing money. We are all in that system, and it seems normal, right?
It sounds crazy when you say it like that, Jeff.
And every payment goes through the system of a tax to centralization of money in money that's losing money, and this other money doesn't lose money. And it doesn't cost anything. So what would the free market do? And then what would the free market of those people do and build incentives? They would reduce their costs to people who wanted to pay in Bitcoin, and they would give more value to that, and it would just shift. And so the US has to do this de minimis, because if they don't, they're going to lose this to other countries and everything else that are going to just move to the free market. And why would they move to the free market? Because we'll demand it. We will demand it. We always look for more value. We're part of the free market. We're inside an exponential trend that people are saying, what is the snowflake that's going to cause the avalanche? Right? And so all of these things conspire, and they keep on driving faster and faster and faster inside that exponential trend. What Cathie just mentioned about the intersection of all of this, that is what's happening. And I could say, okay, what is a wild thing? Venezuela on a change, and then taking all of their extra energy and going into Bitcoin, which is highly likely on a regime change, to be able to pay for their entire infrastructure and energy, which would be a giant thing. But it'll just be one additional thing in a point of a million things that are all happening concurrently.
Booth explains that this is why adoption is exploding in places like Africa, South America, and Southeast Asia. People in these regions are not debating whether Bitcoin is better than the dollar. They are using it right now because it solves real problems. In Kenya, refugees who cannot open bank accounts are using Bitcoin to make payments. In South Africa, people are moving out of tin shacks because Bitcoin is holding value for them while their currency collapses. In El Salvador, entire communities have built circular economies where Bitcoin is the primary medium of exchange. This is not theoretical. It is happening right now and accelerating. Wood highlights that the U.S. government is starting to shift. President Trump does not want to be a lame duck heading into the 2026 midterms, and he knows the crypto community helped him win. She predicts the government will start buying Bitcoin for the strategic reserve instead of just holding confiscated coins. If that happens, it will trigger a global race in which every country realizes they need Bitcoin exposure or risk falling behind. Wood also points out that corporate tax rates in the US have dropped to 10%, the lowest in the developed world, and businesses that build Bitcoin infrastructure can depreciate at 100% in year one. That creates massive incentives for companies to move operations to the US and build on Bitcoin. While Booth warns that people are still measuring Bitcoin through the wrong lens. They see Bitcoin's price volatility and think it is unstable. But if you measure Bitcoin from the protocol side, you see a free market functioning perfectly. Bitcoin is repricing everything, and most people cannot see it because they are stuck inside the old system. He explains that we live in a system where everyone pays 2.5% to move money through intermediaries, and that money is constantly losing value. Bitcoin does not charge those fees and does not lose value, so the free market will naturally shift toward it. The talent moving into Bitcoin, the companies being built, and the global adoption are all accelerating faster than anyone realizes. Wood and Booth both agree that what happens next will not follow the old patterns. The 4-year cycle might be breaking because fundamentals have changed. Institutions are coming in, governments are shifting, and the protocol layers are maturing. Most people are waiting for the next crash to buy, but they are measuring time in a currency that is collapsing. The only question left is whether people will recognize what is happening before it is too late. Do you think Bitcoin has truly reached escape velocity, or can governments still stop it? Thanks for watching, and don't forget to like and subscribe.